Alright, good afternoon everyone. Today is Friday, October 19th, 2012. Let's go over the results first. We are plus 5 ticks on the Russell, plus 5 ticks on, plus 3 ticks on gold, and plus 20 ticks on the crude oil. That's what we had in the live trading room this morning. Alright, if you have not taken a free trial with us, go to www.cfrn.net/apply. Sign up for the free trial. All we need is your name and your email address. With the free trial, you get 5 business days in our live trading room. 2 hours per day. You get to watch us put these trades on, take the trades off, manage trades, talk about all the other trades that we've missed while we were managing those trades, and all sorts of things. All right. We did have a bunch of activity this morning. We didn't take anything on the ES. We didn't take anything on the YM. We did take Russell, gold, and crude oil trades. Alright, none of those charts are actually in front of you right now. I'll bring them over in just a minute. But before we get on to that, let's look at what we had here. Alright, we started out with the YM. We pulled back up to the BBC right here. Alright, and when it was pulling back up to the BBC, I said to close down below this trend line. I had drawn this trend line in right about here, a little before 10 o'clock. I said a close down below this trend line should open the door to lower prices. It closed down below the trend line right there, and it took it a very long time on the YM to open the door to lower prices, but now you can see we have much lower prices. Alright, there were a couple other spots to short the YM on the way down. There was one right there. You can see I circled that right there after we got through the weekly trading zone. And that was it on the YM. I didn't take a single trade on the YM. ES, I didn't take a single trade there either. I'll blow it up a little bit, and we can start over here. In the same area right here, the same time I drew that trend line on the YM, I drew a trend line on the ES. Actually, it was a little earlier on the ES. It was like 10 minutes earlier. It had put in the the higher bottom, the higher low right here. All right. And again, I said when we close down, if we close down below that, we should see the weekly trading zone, which is right down here at 41. It took it a while to get down there, but it eventually did get down there. All right. There were a couple of spots right in here, I believe, you could have shorted. And let me blow it up a little bit so you can see it a little bit better. Right in there, we had a smooth pullback up to the BBC. It was an opportunity to short, and right in here was another one. Now the issue with this one right here was it was getting pretty close to the weekly trading zone. But you could have taken this one or this one according to the rules that I have, that I set out in the live trading room. Either one of those would have worked. I didn't see them. I was probably looking at some other faster moving market because these markets were crawling along this morning. Right up until the European markets closed. All right. The NQ, we did take an NQ trade or two this morning, I believe, didn't we? Yeah, we did, right in there. We took one, but there were many opportunities here on the NQ, as you can see from all the ellipses. Right here at the open, we dropped down through the yellow line right here. The spot to short would have been right in here. Yes, the spot to short would have been right in here. All right, then we had an opportunity here. This is something that Eddie, one of our partners, pointed out when it broke the support level here with the big divergence down here. There was an opportunity to get short right there, and that's usually a very quick moving trade. You don't use much risk at all in those. You can see the price really dropped down off of that, and then it started to recover a little bit. We had red right up here, but the push off did not put in a lower low. We weren't much interested in shorting anything up here as it got up above here. Now, with the bullish cross, you had to test the BBC with an up close right here. Okay, right there is the bullish divergence to go with that up close. You could have gotten long on that, and you also could have gotten long right here once it broke the yellow line and closed up. Any one of these bars right in here, you could have gotten long. Right in here as well with the bullish divergence. I'll just drag this little arrow right over. There's the bullish divergence to support it. Tested the BBC, gave an up close, and moved up. All right. Right in here, it pulled down to the blue, and it dropped right through it. That would have been a losing trade right there. After you lost that trade, there was an opportunity to get short right in here, this level right here, you would have been losing that trade at the time, but you could reverse the trade right here. I did that the other day. You could reverse the trade right here, anticipating a bigger move down. Now it pulled right back up to the yellow brick road right here and went short off of it. This one right here, not as interested in it because we didn't have a lower swing. Right here, you see we got a lower swing, confirmed the trend. It pulled up, tested the BBC, and gave a down close with the bearish divergence, and down it went. Right, came up here. It didn't actually hit the red, and then it didn't put in a lower swing, so I wasn't interested in this. It dropped right down through this level right here. Again, after this blue one here, no higher swing, so not interested in this level right here. It did give 1 bar's profit, but still not interested in it. Once it dropped through and closed lower, there was an opportunity to short the lower close, which would have been right here. Okay, an opportunity to short in there. We also had some bearish divergence, a little tiny bit of it right here, and a test of the BBC with a down close, but we had some more over here, and I actually took this trade right here, and when it closed down below right here, I think I was up 5 or 6 ticks on that trade, and I had put my target right here, okay, 1 tick above the swing low, and I had moved my stop to break even, and clearly it came back, took me out of break even, and then it moved down through my target. Came back up here, tested this, you see we have a lower swing, pulled back up, hit the red, sold off of that really hard. Couple of reds in here, but no lower swings to go with them. So nothing that you're interested in right in there. Okay, and that was the end of the morning session. You can see that it's been selling off since then. I highlighted a few things in here while Dwayne was talking, but it's been selling off since then. Let's see, right in here, the first red, you could have sold that down here. Not a lower swing, so you're not looking to sell this. You're expecting it to break through. Right here, you could have gone long. Okay? That is the NQ. Now, I didn't take any profitable trades on the NQ. I didn't take any losing trades either, but I took 1 break-even trade on it. Let's see, gold. Gold. I took 2 trades on gold, I think. One of them was a winning trade, and one of them was a break-even trade. But it's all the same stuff. This was my break-even trade right over here. It's all the same things that you're looking at. Okay, the same exact stuff. I shorted over here a pullback up to the BBC with a down close. I shorted that right there with this big bearish divergence down here. Okay. And you can see it, had I not moved my stop to break even or to lock in some profit on that. And I actually had my mouse messed up like it just did right there. My mouse messed up a little bit when I was in that trade, and I ended up moving something where I didn't mean to, and it took me out earlier than I'd anticipated. And it gave a huge move down after that. Unfortunately, I was not able to take advantage of that. And you see we had this red here with no lower swing to go with it. Red here, no lower swing to go with it. Red here and here, no lower swing. So you're not anticipating this yellow line is going to keep holding here. You're anticipating that it's going to eventually break. Blue here with no higher swing to go with it. Not anticipating it's going to hold. Right here, it hit the red. Again, we still don't have lower swings, based on this down. This pivot way over here. But it did give the 1 full bar. Once it hit the red, it did give the 1 full bar where you'd bring your stop to break even. All right, same thing over here. And that was at the end of the morning session. All right. If we just run through it right here, you can see there was an opportunity right in here during the break. I mean, this is a huge opportunity, guys. Right here, the risk, it would have gone into your risk probably 2 ticks. If you got in there at 23.7, and if you rode it all the way down, 17.16. So that's 4 and 3.7, 7.7. That's $770 in about, I don't know, what's that, about 3 minutes right there? $770 per contract. That's during the break, so I won't go into too much more detail. It's all the same stuff. All the 4-tick range things, we're doing the same exact thing. All right, here's the Russell. I'll show you the trade that I took on the Russell. The Russell is actually pulling back up to a red area right here off a lower pivot. So you could sell the Russell right here at 818.4 if you're not already in it. 818.4, 0.3.4 right there. I would sell it right there if I weren't doing this right at the moment. This was my trade here off of a similar scenario. Okay, we had a lower swing. It pulled back up, hit the red area. I sold it right there down to the MA1, to the BBC. all right, because we were in one of those congested spots right here. So I sold it down to the BBC and I took some profit there. After it hit the BBC held and pushed it up, giving us a long opportunity with bullish divergence. You could have taken the long up for the ride right there. It came back down. It didn't hit it here, and it didn't put in a higher swing. So you're not anticipating that it's going to hold. It dropped through here. You could have shorted it right in there. Pulled up here, and once it hit right here, it did drop down a full bar, but it did draw down some too. You know, your entry over here, you would have been looking at 27.3 with 8 ticks risk. The thing drew back to 27.9. It would have used up 6 of your risk ticks right there, 6 out of 8. It fell down here, okay, without putting in a higher swing. Could have taken this. It would have worked. It wouldn't have been the prettiest thing. For what it's worth, if anybody's a partner and you weren't in last night's partners meeting, go watch the partners meeting. I want to say the last hour of the partners meeting. I really went through a lot of yellow line stuff, and mostly it was all without the BBC and the MA1, just straight yellow line. Okay, if you become a partner, or if you are a partner and you weren't in last night's partners meeting, go check that out. Alright, so we pulled up here, big opportunity right there. On the way down, let's see, were there any other opportunities on the way down? Yes, right here. Tested the BBC and gave a down close with bearish divergence, and that was it. That was the Russell. Okay. The Russell trades pretty well using the BBC and the MA1 and the yellow line. You know, those divergence trades and just the yellow line trades. It tends to have a lot of respect for that. All right. Now, crude oil, this was actually my big winner on the day, but I didn't take that many trades. My first trade was over here. It was right after the open. We broke through right here. You see we had blue, and it moved up, but it didn't put in a higher swing, suggesting that it wasn't going to hold right here. So when it broke through, I took the shorting opportunity right there and shorted it down here. Okay, I took profit here. It came back up. I didn't get this one right in here because this one was red and it didn't put in the lower swing. I didn't take this. It worked out, but I didn't take it. And I didn't take that, or that, or that. As a matter of fact, I didn't take any more crude trades for a while. It fell through right here. This was, what time is this? Right in here. If you were taking the long trade right here off of the blue area, obviously you would have lost that, and you could have reversed it right in here and clearly taken some profit on the way down. There was an opportunity in here not to short it down to the BBC, but when you saw the red there, it suggested that it was going to move to the BBC. Once it got to the BBC, you had a bullish divergence down here, bullish cross over here, tested the BBC with an up close, could have gone long in there, and then gone long again, even if you missed that, right in here, anticipating a little bit more out of it. Pulled back here, tested the BBC, gave an up close with bullish divergence for some more profit potential right there. All right, this was my second short trade right in here. After it broke the elbow right here and it pulled back up, tested the BBC and gave a down close with bearish divergence. I shorted right there and took some profit. And then this horizontal, this rectangle that I drew on there, that was an area to short, closing below the bar that broke the yellow line. Okay, and that was an opportunity to get into there and there. Let's see, where else has it had any opportunities? Right in here, it hit this, and it gave one full bar up, which is what you anticipate. All right. From there, it dropped through, and you could have shorted anywhere below right here, 91.57, to capture that big move down. Now we're into the break right there, but you can see crude oil got beat up right here in the last half an hour or hour. All right. Did I cover 6E and soybeans? I don't know. I don't remember. Anyway, early on this morning we were looking at soybeans, and Dwayne and I were figuring prices on the bigger picture where we would look to do some kind of trades. Sorry. Am I going too fast? Let me slow down. Actually, it's 12:42. I can't slow down too much. If I'm going too fast for you guys and you haven't taken a free trial, then get into the free trial room. It's not as fast in there. You know, it's real time. It's as fast as the markets are moving. And so it's slower than this probably because this is all in hindsight and I'm just whipping through everything. But Frank, I know you're going to be there on Monday. All right. That said, we have soybeans. All the normal things on soybeans, but Dwayne and I gave our areas where we would consider, putting a buy stop or a sell stop in based on what the market looked like before the open. And I had said 56.75 and 33.5, and Dwayne had said 58 and 32. So Dwayne wouldn't have any entries yet, I don't think, and mine would have entered way over here. We would have hit the entry at 33.5 over here, all right, and from there it only went down about a point or a cent, down to 32, and then it bounced up off of that. This was the level that I was looking at early on, and that was based on an hourly chart. I'll show you what the hourly looks like. Okay, I was looking for a close down below this level. That's what I was looking for. We didn't get any closes down below that level, but that's what I was looking for. And a close below that level or a close above this level. And neither one of those happened. Yeah, I know, Frank. There was home sales. I don't know why the sell-off. The home sales were actually positive, Gary. Yeah, they were better than expected. So I don't know why there was the big sell-off today. All right. Now, right in here on the soybeans, you can see right here it's moving up with bullish divergence down here. Tested the BBC, gave an up close with bullish divergence. There are a lot of those trades in here on the soybeans this morning. Tested the BBC and gave a down close with bearish divergence. Right in here, bullish divergence, BBC up close right up to the yellow line. This one, we're looking for the break of the yellow line right there. All right, the spot that it broke. Bullish divergence, tested the BBC with an up close. Red area down to the BBC. Then going long off the BBC right here. Bullish divergence with an up close and a test to the BBC. Those were all ways to trade the soybeans this morning. Okay. Now let's jump over here to the 6E. I don't think I touched the 6E yet, and then we'll be done. All right. The 6E. Is this today? I just want to make sure I'm on the right day. Yeah. Okay, we hit the red line. We hit the red area right there for a shorting opportunity. It didn't put in a lower swing, so you obviously wouldn't be looking to do it again. It did move down. Wow, I got to take some of these lines off of here. All right, right in here, tested the BBC. This is the area that we're looking for it to break down below, okay, and it did break down below there, right in here. All right, broke down below there for a shorting opportunity. Again, tested the BBC with a down close with the bearish divergence. Over here, it broke through the upside. If you had if you had a short trade waiting on that red area right there, you would have just lost. This one right here would have worked out okay. It did put in a lower low. And that's it. It was kind of a sleeper today on the 6E. All right, the euro wasn't all that exciting. There. All right. That, everyone, if I haven't just put you to sleep or completely confused you, that was our morning trading. Again, we ended plus 20 ticks on crude oil, plus 3 ticks on gold, and plus 5 ticks on the Russell. Obviously, there was a ton of opportunity out there. Anybody trading any of the markets this morning should have done at least as well as I did, if not better. Unless you hit your daily goal, which might happen to be some amount less than what I got. But either way, the opportunity is there. If you haven't taken a free trial with us, go to www.cfrn.net/apply. With that, I am going to wrap it up.